Welcome to Smart Stock Watch. Today is May 5th, 2025, and we're diving into the first quarter earnings report of Park Hotels and Resorts. Joining us is John, senior analyst from Smart Stock Watch. John, can you give us a brief overview of Park Hotels and Resorts and their latest earnings release?
Thank you. Park Hotels and Resorts is a leading lodging real estate investment trust with a diverse portfolio of iconic hotels and resorts. In their Q1 2025 earnings report, they announced a net loss of $57 million, a significant decline from a net income of $29 million in the same quarter last year. Despite this, they have maintained strong liquidity with $1.2 billion available, which positions them well for future growth and strategic investments.
Revenue and profitability overview. Let's start with the top line. Park Hotels and Resorts reported total revenues of $630 million for Q1 2025. However, they also reported a net loss of $57 million. John, what are the key factors behind these figures?
The revenue of $630 million represents a slight decline from $639 million in Q1 2024. The net loss of $57 million is primarily due to a significant drop in operating income, which fell to $7 million from $92 million last year. This decline in profitability is attributed to increased operating expenses, including a notable impairment and casualty loss of $70 million this quarter.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 39 for Park Hotels and Resorts. Based on a survey of 5 analysts, the company reported an adjusted EPS of 46 cents. John, how significant is this beat?
This is indeed a positive outcome for Park Hotels and Resorts. Beating the forecasted EPS by 0.07 cents indicates that the company managed to perform better than expected in terms of earnings, despite the challenges in revenue and net income. This beat can be attributed to effective cost management and strategic capital allocation, which helped improve their adjusted funds from operations.
Strategic initiatives and capital investments. Park Hotels and Resorts has been active in capital investments and strategic initiatives. Can you elaborate on their recent activities, John?
Absolutely. Park Hotels and Resorts returned $95 million to shareholders through dividends and share repurchases, buying back approximately 3.5 million shares. They also invested nearly $80 million in capital improvements during the quarter. Notably, they are planning a $100 million renovation at the Royal Palm South Beach, Miami, which is expected to yield a 15 to 20% return on investment. These initiatives reflect their commitment to enhancing shareholder value and strengthening their portfolio.
Market performance and future outlook. Looking at market performance, Park Hotels and Resorts reported a RevPAR of $177.67 and an occupancy rate of 69.2%. How does this align with their future outlook?
While RevPAR saw a slight decline of 0.7% year over year, the company remains optimistic about future growth. They have a strong liquidity position of $1.2 billion, which supports their strategic initiatives and capital investments. The company is focused on disposing of non-core assets and reinvesting in their iconic portfolio, which should drive long-term growth. Their guidance remains strong, with expectations of continued improvement in key urban markets and resort demand.
Key takeaways. As we wrap up, John, could you summarize Park Hotels and Resorts' performance and their investment prospects?
Despite the net loss of $57 million, Park Hotels and Resorts demonstrated resilience with an adjusted EPS of 0.46, beating analyst expectations. Their strong liquidity and strategic investments, such as the $100 million renovation project, position them well for future growth. Investors should consider their robust capital allocation strategy and potential for long-term value creation.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Park Hotels and Resorts performance in the comments below.